Central banks are the silent architects of your financial reality institutions, so powerful, yet so rarely questioned. They don't campaign for your approval, they don't stand on debate stages, and most people can barely describe what happens behind their closed doors. But these institutions influence the cost of your money, the direction of your economy, and the weight of every financial decision you've ever made. They can inflate fortunes with a single policy or vaporize them just as fast. And the strangest part? You never voted for any of them. This is the untold story of how central banks rose to dominate modern finance not as impartial guardians, but as strategic players in a system designed long before you were born. It's a story of quiet power, engineered stability, and decisions that ripple through your life without your awareness. And once you trace how it all began, you'll never look at your salary, your savings, or your debt the same way again. The truth is deeper and more unsettling than you've ever been led to believe. The story of modern money doesn't begin with prosperity. It begins with desperation. When governments ran out of gold, out of credit, out of options, a quiet arrangement formed between political power and financial power, and that arrangement still shapes your life today. Central banks didn't emerge as guardians of stability. They emerged as deal-makers, created to solve one problem: how to keep governments funded when their treasuries were empty. It wasn't about the people. It wasn't about fairness. It was about survival for those in charge. And once those early bankers realized they could issue paper backed not by gold, but by government IOUs, everything changed. Money became an instrument of influence, a lever, a tool. Over the centuries, central banks evolved from private clubs of wealthy financiers into towering institutions with the authority to dictate the cost of borrowing, the flow of credit, and ultimately, the pulse of entire economies. But their mission never fundamentally changed. They still serve the system long before they serve the citizen. By the 20th century, these institutions weren't just adjusting interest rates. They were shaping global trade, controlling liquidity, and acting as the lenders of last resort for financial crises they often helped create. Every boom, every bust, every cycle of expansion and collapse has their fingerprints on it. And here's what most people never learn. Central banks don't follow the market, they move it. When they cut rates, asset prices rocket upward. When they tighten, markets shudder. When they print money, the cost of living rises quietly in the background while shareholders celebrate. This is not an accident, it's the design. But their greatest power isn't monetary. It's psychological. Through jargon, forecasts, and press conferences, they shape expectations. They influence behaviors. They tell the world what to fear and what to believe. They operate above politics, yet influence it more than any elected official. And ordinary people? They're left navigating a system they never asked for, never voted on, and rarely understand a system where every financial decision, from buying a home to paying off a loan, is downstream from choices made by institutions with no ballot box accountability. This is the architecture of modern money: centralized, complex, and built to keep the machine running no matter the cost to those living inside it. To understand how central banks shape your financial life, you have to understand what they actually optimize for and what they don't. Their public mission sounds noble: stable prices, strong employment, smooth economic functioning. But the unspoken mission is simpler: protect the financial system at all costs. Every crisis in the last century reveals this pattern. When markets crash, when banks wobble, when debt becomes unmanageable, central banks don't wait. They intervene aggressively. Not because they are heroes, but because the system they're sworn to protect can't survive without them. In 2008, credit markets froze. Banks teetered on collapse. The average person lost jobs, homes, and savings. But central banks didn't send relief to households first. They injected liquidity into banks, backstopped failing institutions, and propped up markets. The wealthy recovered, the system recovered. But millions never did. In 2020, it happened again. A global shutdown should have meant economic freefall. Instead, within months, stock markets soared to record highs. Why? Because central banks flooded economies with trillions in newly created money. Corporations thrived. Investors thrived. But small businesses, renters, and workers faced the harshest fallout. This is the hidden function of central banking. It shifts financial pain away from the top and distributes it downward. Inflation eats savings. Higher rates crush borrowers. Market rescues inflate asset bubbles that only asset owners benefit from. The cycle repeats, crisis after crisis, benefiting the few while burdening the many. But the most important truth is this: central banks operate in a world increasingly detached from real economic conditions. They watch charts more than communities. They measure stability in asset prices rather than household well-being, and they speak in a language engineered to obscure rather than enlighten. Their independence, often celebrated, is also their shield. It allows them to wield immense power without electoral scrutiny. They answer to markets more than citizens. They communicate through signals rather than transparency. And while they shape your financial environment, they never have to justify their decisions at the ballot box. So the question isn't whether central banks are good or evil. It's whether they are accountable. And in a world built on debt, leverage, and financial engineering, accountability is the one ingredient missing and the one the public deserves most. If you want to step outside the system, you first have to see how the system is built. Central banks influence money, but money influences everything: housing, wages, savings, investment, opportunity. When the cost of money is distorted, every part of life is distorted with it. Low interest rates make borrowing cheap, but saving pointless. High rates slow inflation, but crush anyone relying on credit. Money printing inflates asset prices, yet erodes purchasing power. And through it all, the same pattern repeats. Those closest to financial assets thrive, while those relying on income struggle. This is why understanding central banking is not academic, it's survival. Not because you can control central banks, but because you can control how exposed you are to the ripple effects they create. The first step is recognizing that the traditional pathwork, save, retire, no longer functions the way it once did. Savings accounts lose value. Housing runs away from wages. Markets move faster than income. And debt has become a built-in feature of modern life, not a choice. So the strategy isn't to fight the system, but to position yourself so you're not crushed by it. That means owning assets that don't depend on endless money printing. It means diversifying across income streams instead of relying on a single employer. It means understanding that financial freedom comes from separating your well-being from the decisions of central bankers. It means seeing clearly that stability, the word central banks love most, doesn't always mean safety for you. Often, it means safety for the institutions that rely on you. Because when the next crisis hits, and history guarantees one, always does, central banks will protect markets first. They will protect debt markets. They will protect liquidity. They will protect the architecture. Protecting households will come later, if at all. You can prepare by building independence. Independence from debt, from single income, from fragile savings, from the stories we're told about how money works. Because once you understand the incentives behind the system, you stop feeling powerless within it. You stop blaming yourself for rising costs, shrinking savings, or disappearing opportunities. You start realizing the truth. Financial literacy isn't a skill, it's a shield. And in a world built on debt and intervention, that shield is the closest thing to freedom you'll ever have. Money doesn't lie, but if you don't learn how it works, it will rule you forever. If this opened your eyes, hit subscribe. The system leaves clues. I'll show you how to read them.